The dust is still in the air, but the question now is simple. What happens next? This crash wasn't random. It was a policy shock. The White House hit China with 100% tariffs and fresh export control threats on critical software, and markets flipped to risk-off in minutes. Bitcoin knifed lower. Reuters had it at $104,782 during the worst of it, and stocks sold off together, the S&P 500 posting its biggest one-day drop since April. Then the mechanics took over. A historic liquidation cascade. Analysts tallied $16 to $19 billion of positions wiped in about 24 hours, turned a sell-off into a landslide. More than 1.6 million traders got liquidated, according to multiple trackers. China's response so far has been sharp on rhetoric but measured on action, defending its rare earth export controls and criticizing U.S. tariffs, leaving a window where tensions could cool or escalate from here. So, now what? Path 1. The stabilization path. When leverage is purged this hard, markets often breathe, then mean revert. If headlines calm and flows steady, BTC can grind back toward 112K to 115K as panic premium fades. We've already seen days this week where spot ETF flows were net positive, even amid fear, proof that buyers didn't vanish, they just paused. Path 2. The aftershock path. If tariffs ratchet higher or Beijing retaliates materially, risk assets can take another leg down. ETF outflows on stress days act like a headwind, and dollar strength can keep pressure on crypto. That's the route where BTC retests the 100K handle and alts lag longer. What I'm watching this week. First, policy headlines. Any hint of back-channel talks cooling the tariff threat would be a green light for relief. Any escalation, new Chinese countermeasures, keeps volatility high. Second, flows. Daily spot ETF flows are the clearest heartbeat of demand right now. Strings of net inflows would say dip is being bought. Strings of outflows, expect chop. Third, liquidation and funding metrics. The big wipeout is done. If funding resets flat or negative and liquidations shrank, the path of least resistance is a drift higher. Positioning for what's next. No drama, just rules. Number 1. Scale entries. This was a news shock plus leverage purge. You don't need to nail the tick. Ladder bids over days, not minutes. Number 2. Respect levels. BTC's battle zones are 100K to 105K below and 112K to 115K above. Lose the first and you wait. Reclaim the second and momentum traders re-engage. ETH's morale lines are roughly 4.3K to 4.5K. Above the band, alts breathe again. Ranges implied from the newsday lows and rebound zones reported around the move. Finally, zoom out. We just saw the market absorb a geopolitical haymaker and the largest liquidation event on record by some counts. That's bad news for overleverage, but it's also how new bases form. If policy cools and ETF demand reappears, this can flip from capitulation to accumulation faster than it feels today. This is my read, not financial advice. Tell me your map. Are you positioning for a reclaim toward 115K or bracing for one more sweep of 100K first? Drop your plan in the comments, and I'll pin a flow and levels update once we get the next ETF print.